Let's take a look at disability insurance as part of the benefits packages offered by organizations from a total rewards perspective. This type of insurance can be either short or long-term in nature, and some organizations offer both. Short-term disability is insurance against being unable to perform the essential functions expected of the employee at work for up to 6 months due to illness or injury, not necessarily work-related. This provides valuable protection because most long-term disabilities policies do not provide replacement income until the employee completes a 180-day elimination period, a period during which they're unable to work. Because 71% of Americans say that it would be difficult to pay their bills if their paycheck were delayed for more than a week, waiting 6 months would likely create a massive hardship for a disabled worker. Remember, too, that Social Security disability doesn't apply unless the employee is going to be disabled for at least 5 months, so short-term disability can bridge this gap in income. Long-term disability policies cover employees who are unable to work for more than 6 months due to illness or injury, again, not necessarily work-related. This is a supplemental benefit to Social Security disability payments because, remember, Social Security payments are not designed to replace 100% of the employee's pre-retirement or pre-disability income. Long-term benefits most often begin once the employee has exhausted their short-term disability benefits. Benefits from group long-term policies will generally continue until the employee reaches their eligible retirement age under Social Security or they're able to return to work.